You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again. It is time to kick off a brand spanking new trading year. Yes, usher in a mad new year of 2024. It's time to talk all things vol for the first time this year. Kicking off our, it's been 18 years already on the network. How wild is that? January 2007, all this madness began. Still not just rocking and rolling, but growing here into the mad year of 2025. Thanks to all of you who've been with us at any part along that journey. VolViews itself been going for well over a decade, so long running, well established in the world of options and vol, and they literally couldn't do it without all of you folks out there. So thanks again to all of you out there who listen, download, stream, subscribe, engage on social media, whatever it is you do to engage with the content. We appreciate it all at the end of the day. But it is a new year, a lot to get to here as we look back on the insane year that was 2024, the highlights, the lowlights, and everything in between. And joining me to do just that for the first time here in the mad new year of 2025, our old pal, the Rock Lobster, a.k.a. Andrew Giovinazzi, from the land of the pit, which is known as a dark and stormy land these days, blowing the roof off his shed. Mr. Rock Lobster, welcome to VolViews for the first time in what could potentially be the mad year of 2025, sir. We don't know yet.
We don't. I think we just swore in a new Congress today. So if that doesn't get you excited about trading and volatility and everything else, new Congress. The speaker just said we're ushering in a new era for America.
If that doesn't get you excited,
let me guess, in 6 months, it will all be lies and deceit. But hey, what the heck? We're going to celebrate
6 months. Wow, you're generous. I would say 6 days, but you're looking pretty optimistic.
The next $8 trillion omnibus spending bill, which makes everybody rich but American citizens.
Here's the deal, Mr. Rock Lobster. You fight inflation through more spending. I don't know if you know that. It's called the Inflation Reduction.
I totally forgot that playbook.
That's how you do it.
It's the Milton Friedman. I was looking for the chapter where continued endless borrowing cuts inflation.
Yes,
down for us.
You have to put out like an oil well fire. You can only blow it up with more explosives, more fuel.
Yes.
And that's what inflation is. You have to blow it up. It's the only way to kill it. But I digress, listeners. We got a lot of fun to get to. Let's get to that fun. It is time for the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review. We're going to do something special, obviously, for our first episode of the year. We're going to start looking at what's going on right now to kick off the year. Then we're going to go deep into the madness that was last year. I know a lot of you played thousands of votes in our end of the year VIX poll, which we did, of course, at the end of 2023. We will do again for the end of this year. So stay tuned to the end of the show if you're one of the many hundreds who sent in your... I was surprised. A lot of you were actually fairly close to the mark. So stay tuned to the end of the show to see if you are one of the winners. I think we have a pretty cool, fabulous prize to give away to those. But they earned it. They earned it. We'll see if the Rock Lobster agrees. But kicking things off, listeners, after yesterday, Uncle Mike was a little sad on his first appearance on the network for the year because it wasn't an Uncle Mike type of day. We were selling off. Vol was popping. Today, reverse all that. Markets rallying. S&P up 1%. NASDAQ up about 1.4%. Dow, ever the laggard these days, up 0.6%. And VIX coming back down the other way. Was at about 16 3/4 when we kicked off the show. Puts it down about 1.25 points from where it was this time last week. VVIX, the vol of vol itself, at a 101, down about 5 points from where it was this time last week. I should say last year. All right, Mr. Rock Lobster, let's start there. Obviously a truncated holiday week, so not a ton of trading. But what, if anything, caught your eye in this week's vol action, sir?
Well, first off, the fact that we had volatility at all. Did anybody get the memo? It's the week between Christmas and New Year's. It's supposed to be Santa Claus rally. Fun to be had by all. Ice cream, peppermint cakes, and hot toddies, and we got VIX going to 19. What the heck? That's darn right un-American.
Everyone was drunk on their said hot toddies, sir. That's why.
I was not happy with that. So basically that was the shocker for me. And I have to admit I did hedge a little last week. I bought some VIX call spreads because I own probably more VIX puts than I should have. Didn't sell them the day after Christmas when they were all green. I was a little greedy, and I just figured, oh wow, this is perfect. We'll be running into like a low 14s. I'll make an extra, 60, 70 cents a contract. Woohoo! No, that was the bottom for vol on the December 26th. So, dopey me. Now I might have to wait till maybe even into expiration to get the same prices I would have got on December 26th. So I would just say note for all vol traders. With like vol products like that, you get a low, you got a low. And then if the lows don't keep happening, generally you should probably respect that, especially if you have open positions. So I tend to hold my short vol way too long. Anyway, that was as far as what happened. We actually had some volatility, so I was probably a little lazy, but we'll see. We'll have to see with the market, but we also had a pickup in realized vol. So I thought that was pretty amazing. That 10-day volatility jumped to almost 20% for SPX, and we haven't really had we haven't had really that kind of vol in a while. So we had those couple of crazy candles. We had that like sort of pre-Christmas one, then everything kind of recovered, and let's just say this 2 weeks after the 15th, the Santa Claus rally kind of ended on the 15th, and we have had a pretty bouncy couple of weeks in SPX since then. So I guess, when you have those huge down candles, it's usually, and then you get involved, you're looking for a little bit of recovery to vol to the lower levels. and it doesn't do that, you probably should take that as a sign. But right now, VIX is trading about 16.5, which I would say is kind of fair, based on the kind of action that we've been having. So at least in the near term, I feel like those moves are like we're getting them, the market's moving, but I don't feel like the headline news warrants the type of moves we've been having. Like normally, okay, you got this Japanese yen unwind trade, right? And then you have this huge liquidity squeeze and things go kablooey in August. And that you can get some very severe dislocations. I didn't really catch that kind of news here. And I have been noticing from a vol point of view, Mark noticed this, Sebastian, he's like, okay, well, when sort of treasury bonds are heading down, everybody was piling into Apple, and now they're kind of unwinding that. I mean, Apple was up. And again, I know this isn't VIX, but Apple is such a big stock now. It kind of feels like the market. But I mean, to the 24th, Apple was up $40. So Apple was up almost 20% in a month. Is that possible? $40 on a $220 stock, so 15% in a month, from November to December, Thanksgiving to Christmas, basically. That's an enormous move for a market cap that big. That is a lot of money piling into that thing. So it appears like it's all trying to hit the exits now, and folks are buying other stocks, which I think in general is healthy. That also tends to kill volatility because you get rid of, you start selling some of the big caps off, take some of the heat out of those stocks, then you buy other stocks, which generally sort of kills the volatility in the broader market because money is just moving from one place to another. So I see that right now. But like there's no reason that Apple can't, because after earnings, Apple did not do very well at the end of October, beginning of November. And like, I don't know what drove it to 260, but we're now back at like 242, and it's retraced a good $20. So I just looking at it, I think the option premiums are relatively inexpensive in there. I'm just writing a piece on it for my subscribers this weekend, but I would say I don't think the vol should be 17 in there. Put it that way. At least for the pre-earnings options. So we've had another the Qs are up 30% this year on top of a 25 or 30% run in 2023. Now 2022 obviously was terrible, but still pretty big move. And what I would say is, except for Apple into the end of the year, none of the stocks were near their highs. I mean, in Nvidia, way off that 150 high, although it's coming back today. Amazon, not at the highs, but I think Google was the one that might have been doing a little better. Wow, yeah, Google's kind of holding up there. AVGO near highs. So you have a couple of the bigger chip stocks. Google, Microsoft is still about $40 below, $50 below its highs, something like that. So some of the heat has come out of the Magnificent Seven. But you would think we would have had a cooler period going into the end of the year, and we just didn't. Now, I don't know if it was just less liquidity. It was thin. I mean, I know when we were market makers, way back 100 years ago, the holidays were always thin. I recall there's not a lot of volume. The option volume, I mean, it was those days where you could listen to the time clocks tick on the floor. That's how quiet it was. There was that much, there was that much action. You could hear the time clocks going off. That's when you knew things were slow. So I don't imagine anything is a whole lot different now, although I am, 15 years removed from trade. Oh my gosh. Yeah, at least 19 years removed from floor trading. It's hard to believe, but But anyway, that's kind of where we sit. I just realized I spent more time as a retail trader now than as a professional, as a floor trader. I think I just crossed that barrier. Let's see, 15 years floor trader. Wow, now I'm just feeling old all of a sudden.
You're a degenerate retailer.
You got to be close there too. You're like, I've been doing option radio longer than I was a floor trader.
Oh, definitely. I passed that.
Ran over that bridge a long time ago.
I passed that a while. We're 18 years. I certainly wasn't on the floor for 18 years. So there you go, listeners. I left the floor just full of vigor. And then the options podcast.
you were still a young buck with your brains left when you left.
All right, let's get to some of the fun. It is that time, Mr. Rock Lobster. The folks have been waiting breathlessly for us to look back at the mad, insane, tempestuous year that was 2024 from a vol perspective. So allow me to walk you through the many stages of grief/vol that was 2024, listeners. We kicked things off 1404 to start the year. So that's where we came out of the gate. I've been saying for a while, and yesterday was yet another example. Lately, January's kind of come roaring out of the gate like a lion. We've seen a lot of insane things. Obviously, Jan 6 comes to mind. People forget January of 2020. We assassinated that Iranian general. First couple of weeks of January as well. Of course, the meme stock madness of 2021 kicked off right in the pretty much early January as well. So there's been a lot of things that have happened in early to mid-January that seem to have conspired to set us on a weird trajectory. The last year we kicked it off at 1404. I think you can probably guess what the high for the year was, what day it was. Maybe not the number, but the day. Yeah, it was August 5th. 38.57. Disregard some of your platforms are going to say. I've seen a lot of weird numbers thrown out for the high that day. 60, all kinds of weird numbers for that day. Disregard all that nonsense. 38.57 on August 5th. The low came heading into the summer, which is kind of interesting. Seems like folks were getting the heck out of Dodge early. May 21st of this year, the low was 11.86. So that gives us a range on the year of 26, almost 26 and 3/4, 26.71 to be precise. If that sounds a little wide, pretty impressive range, it actually is. Certainly compared to the year before, which the range was eerily enough exactly 19 points in 2023. Our high in 2023 was 30.81. So we're talking about 7.6 and change points below our high from this year. And the low, weirdly enough, almost identical, 11.81. So kind of strange there, but that gives us an exactly 19-point range on the year. Of course, August 5th kind of gumming up the works there a little bit, giving us a little bit wider range than maybe otherwise would have happened if we didn't have that one data point kind of gumming up the works. And now, speaking of gumming up the works, Mr. Rock Lobster, I want you to co-sign on this because this number would become important later on when we are determining whether or not to dispense massive prizes. I've seen a lot of debate about this number as well, which would seem like a simple thing. Where did VIX cash close at the end of the year, 2024? If you go on some of the publicly available, widely viewed outlets, like let's say Google Finance, they're going to show you a 1737 out there. But I went straight to the horse's mouth. I went to the mothership. I went to SIBO itself, and they say 1735. I also ran it through the Flowmasters platform, which is, of course, a SIBO-owned platform now, and they also say 17.35. So double SIBO verification for 17.35. Do we have triple verification? Mr. Rock Lobster, what do you pronounce as the closing print for 2024 in VIX?
Very interesting. I will give you my 2024. My closing print is 1735.
All right, I just want to make sure, and I don't want anyone taking umbrage saying, I was closer, I was 0.02 away, and you took it away from me because you adjusted it. So there we go. We have verification, 17.35 listeners. Remember that for all of you who are playing in our end of the year epic prize battle. And I know a lot of you did. All right, we'll get there. We'll get there, listeners. Let's go now for the range, some other factoids on the year for our old pal VIX. We always talk VVIX, the vol of vol, but obviously there is a rolling 30-day measure of VIX vol as well that you can look at. It doesn't have some of the nuances that go into the VVIX calculation, a little bit more of a straightforward number. When you go out there, the low for the 30-day vol of VIX came June 28th, 44.1 was our low, again, for the 30-day vol of VIX. The high, I mean, VIX vol can get spicy. Take a guess. Maybe not exactly the day you're thinking, but in that range. Not August 5th, but August 9th, 285.8%. So rocking, just a rocking year out here for the vol of vol out there in VIX itself. Some other notable levels out here in VIX. What was the sleepiest day in terms of VIX options throughout the year? Well, not maybe when you would expect as well, not mid-December when it traditionally is, but actually right around Thanksgiving, November 27th to be precise, 258,093 contracts. That is our low volume threshold, our floor for the year. Can you guess what the high was? I'll give you a couple seconds, listeners. Can you also guess the date? I'll give you a hint. It's not August 5th, but it's pretty darn close. That may surprise a lot of people out there as well, but it wasn't August 5th. It was actually August 2nd. Remember, we had that wild move going into that weekend as well. It was kind of a wild time. August 2nd, 3.37 million contracts going up on August 2nd, listeners. So quite the banger day. Also over a 3 million contract gap, a chasm between the high and the low volume levels out there. So VIX had quite the journey this year in terms of days where things were kind of rocking. We can also measure not just by volume, but total options open, how many contracts were actually open in VIX. The high for that came, again, maybe around the time you would expect, but not the day you would expect. Not, let's say, August 6th or something immediately after that. No, August 21st. So fully a few weeks later, you're talking about almost 18.6 million contracts open in VIX. So that is sizable, listeners. That is serious business. That is calls and puts, obviously, combined. If you want to go the low day out there, you're talking a little over 9 million, so roughly half. And that was very recent. That was December 19th, 9.04 million out there for the low in terms of VIX open interest. A couple other interesting nuggets for the year. The put-call ratio. The low for it came on a similar day to what we were just talking about. The low 30-day vol for VIX came on June 28th. The low for the put-call ratio, 0.14, came on June 27th. The high, also maybe not a day you would expect, November 4th. Interesting. So a lot of folks coming in. Remember, this is put to call. So the higher that number, obviously, the more put heavy we were. And obviously, there were a lot of folks doing the old vol fade on November 4th. Yeah, that trade kind of worked out. I talked about that on the network. It was one of the easier, more predictable type trades we've had on the screen in quite some time. All right, Mr. Rock Lobster, I just broke down a lot of data points, a lot of highs and lows in VIX from this year. As you look back on the mad year that was 2024 from a VIX perspective, what stands out to you, sir?
I think the mad, like, I was surprised we didn't hit lower lows for VIX with the strength of the rally we had. So we had S&P 500 up 25% this year or something like that, Q30, which is a pretty insane rally overall. And we didn't spend a lot of time in the 12 handle. I'm going to say, yeah, it was pretty slim. So not a lot of time. I mean, we did have that one period, I think April, May, June, where like vol stayed pretty low, but the second half of the year, we didn't really even sniff the 12 handle, maybe for a day or two. So after June, we didn't see zone one for more than a day or two after June. After the end of June. So the second half of the year was much higher volatility than the first half. So there's that. So that was surprising from a VIX point of view. And we rallied, fairly strongly for most of that period of time. We also had the month where volatility stood still when all anti-correlations broke going into the election, because VIX was picking up the election volatility. And where, remember, everybody thought the worst was going to happen, Trump would do this, Biden would do this, that, whatever, right? So the tinfoil hat thing is still going strong on that, as to why, or how could Trump win, or how this. But there was so much of that I think that was one of the higher volatility. Like, it was besides the COVID election, right? Whenever 2020 and the whole thing with COVID and people have lost their minds. That was I would guess the second highest vol we've seen going into an election that I can recall. So that was, that was a surprise. Now, here's the thing: is this going to be a thing in the future where you bid the vol for the election? That will be an interesting topic when we can hopefully, right? We're here to revisit it in 2028. So you had that as VIX. The fact that we didn't really spend a lot of time in the lower quartile for VIX, as strong as it was for the year, is pretty amazing to me. And I think those are the two big things. I would say another thing we saw was, this is the year VIX did raise its head. We were in zone 4 twice. Both, I would say, out of nowhere. You had that yen carry trade, surprise. What did Mark call that? The carry bomb. And then we had this, what I would call probably the best day of the year for me, to be quite honest, was December 17th, right? When we had that crazy 2% sell-off. It was by far my best day of the year. August 5th was a good day. The backside of August 5th was quite good. But as far as single day trade, I closed the most good trades, or closed the most protective contracts on the 17th, December 17th. So the fact that VIX moved from 0 to 50 so fast, I thought that was interesting and substantial. So we had, let's see, we didn't see a whole lot of the low end of VIX. We saw a couple of just crazy VIX spikes. I believe we had a historic spike. December 17th jump in VIX was a historic one-day move on a percentage basis. It'd be like percentage of VIX and whatever. But all I know is that VIX was 13 or 14 before, and then by the end of the day, it was 25 or more. It was 28 at midday. So it was at least a double for VIX. So we had basically no new low. I mean, we had very little time in zone 1. We had a couple of huge spikes, and the second half of the year, we were in I would say zone 1, zone 2 the whole time, which is not, Now, granted, that's why they call them quartiles, right? 1 quarter of the year, 12 and below. 1 quarter of the year, 12 to 18. Another quarter of the year, 18 to 23, and then another quarter of the year, 24 or higher. I mean, that's historically basically how it breaks down. And, I guess you could say we got that. But the funny thing is, we only had really 2 spikes above 24, and they only lasted, we had maybe 8 trading days over a 24 volatility. So we had a lot of business in the middle, but not a lot on the ends. So you could say for the 2024 trading year, in a year that had, I would say, some sharp up moves, you had a lot of volatility in the middle. There was some pretty decent volatility trading opportunities. And I would say those would be the biggest observations that I can make without actually going to observing the vol products, which did some things that they don't normally do, which, spoiler alert, could portend for the next year. But we can get into that when we do the vol products.
All right, we'll get into that indeed. Some of you have asked, any trades or trends that stand out throughout the year. Obviously, the Rock Lobster just broke down his perspective on that. I look back at the year that was, and I think of overall trading trends that really stood out to me from 2024. It definitely seemed like the year of the return of the ratio upside. I mean, listen to any of our shows from last year, listeners, and someone was short the 20s, long the 42 halves or the 47 halves, or pick your strike to the upside of choice in pretty much every month and pretty much for size. That was kind of the trade structure of the year. Kind of interesting to watch that. Had a couple of moments where maybe you could have flirted with taking some of that off, but for the most part, it wasn't a highly profitable endeavor. But then again, that's why you structure it that way, because hopefully the cost of carry to that is negligible or perhaps even a credit, depending on how you set it up. So that's one of the reasons people do it that way. It gives you a lot more time at the table to capture that home run, that blackjack out there. So interesting structure, and we saw a ton of that. We didn't see some of the other things, let's say the size, massive print that everyone's fascinated about and talking about. We didn't see a lot of other interesting structures out there. We did have an interesting structure in VSTOXX. Get to that in a little bit out there. But for me, if I have to think of the narrative for the year in terms of trade structure, it definitely was the ratio call vertical. Mr. Rock Lobster, do you concur with that? Or are there any other trade structures or trends that stand out to you from this year?
We did see a lot of those, no question. And I thought we might have had a return of 50 cent. That would be the other one. Like, so buying the big chunk of, I think he bought February calls. He or she missed 50 cent.
Miss 50 cent.
Bought a bunch of, I think some February like 22s, which kind of pushed VVIX up quite a bit. So yeah, I say that 1x2, and that is an interesting structure. I love always the way it looks. I'm not always happy the way it performs. If you butterfly it off a little bit, so then you don't have to deal with that upside piece, it's still a pretty decent trade. I think it is a good trade structure to use. I think for retail though, when things kind of blow up a little bit and the vol goes a little crazy with those two short pieces, it's not the easiest thing to explain to people. So we don't really use it in what I would call like our retail trading products. But it does work. And I always thought the way we were seeing them in here was more they're buying two and selling one. Unless I'm wrong.
Yeah, selling one. So selling usually around the 20 handle and buying 42 half, 45, 47 half, somewhere in that range usually.
Right, which, in my head, that's where there's no vol edge in that trade. One, and it does give you a long Vega component, right? So that's the other tricky thing, is how do you unwind it to make money? So I like them. I like the buying the near the money and selling the outs, just because the nature of the VIX and the futures. I think it's probably better if you understand how it works. But yeah, that as it's one of those things where I think the 1x2 ratio backspread, what they call it, looks good on paper. The problem is it starts to fail as you get, when you're 3 weeks into expiration and you still you're short the 20s and you're long the 40s. That is an unruly structure to manage, because the short end just ends up taking over, and then you might get some performance out of the 40s. Anyway, but we saw a lot of it, and that is not my favorite structure in VIX. But I guess for somebody that wants to have that extra upside contract where the margin isn't a big problem, it must make them happy because they're doing it. But it's not my favorite looking trade. Maybe when VVIX, maybe you're going 3 months out, volatility is relatively cheap in VIX. It might not be too bad, but the way that I see them do it, I guess they kind of play it that way because they never really do it short term. It's more like three, they would be playing like VIX in, April or, March or May, something more along those timeframes. So that's just a lot of margin to keep out there that really isn't doing much. Like, okay, I'm going to put this on and wait for vol to do something. So if you have the book that works for, I guess that's fine. But I don't think it's the best retail trading structure. It's a good thing for us to look at and go, wow, look at them do that. But I don't think it's the best thing for us just little fish in the sea to do.
Well, let's see. We're on the tip of looking back on the year, listeners. So let's keep expanding that purview. Go beyond our shores. A little bit of international volatility review.
It's time to explore what's happening in the volatility market beyond our shores. It's time for the International Volatility Review. The International Volatility segment is brought to you by Eurex, home of Euro stocks, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European volatility benchmark, at www.eurex.com/VSTOXX.
All right, everybody, welcome to the International Volatility Review, the portion of the show where we go beyond the domestic markets, see what's popping off in the world of all things international vol, particularly setting down there in the Eurozone. An interesting year out there in VSTOXX. Coming into the start of the show right now, we closed at a 16.92, puts it up about 2/3 of a point from where we were a week ago, or indeed a year ago. How did this year play out from a VSTOXX perspective? We started it 15.49, ended the year in VSTOXX, weirdly enough, 17 even. Don't see that too often. Not 17.01 or 16.99, 17 even on the year is where we went out. Looking back at our range, our activity for the year, listeners, the high, you could probably guess it, 31.16 on August 5th. That, of course, compares to the high VIX got to of 38.57. Now, looking at it, the lens between VIX and VSTOXX in that scenario is kind of interesting because that was primarily an international vol incident, if at least you believe the inciting incident reports of the yen carry trade, but also not in the Eurozone and not in the US. So kind of outside both of their spheres of influence, if you will. So interesting to see how VSTOXX reacted versus VIX. Exploded, but a little bit more muted than VIX. The 52-week low came in mid-May out there, May 17th, 12.13. That gives us an exactly pretty much 19-point range, 19.03 points on the year to be precise. That, of course, compares to about 26.75 point range for VIX cash. Again, a lot of that difference coming to a little bit higher upside on August 5th. You take that one August 5th outlier data point out, and these charts are remarkably similar. In terms of action on the year, volume for VSTOXX on the options front, a pretty good year. You folks have been listening to all things VSTOXX, listening to Russell talk about some of the highlights out there as well, and have been piling into the options as a result. Volume on the options alone up 38% in 2024. So a banger year by just about any metric. Futures volume also up, not quite as strong, up about 14%. And as we talked about last week on the show, if you're looking down the road a little bit for maybe something to keep your eye on in the near term for near-term catalysts for vol in the Eurozone that are Eurozone specific, don't get much more focused than the German elections coming up February 23rd. Mark that date on your calendars. Even if you're not a big VSTOXX trader or watcher, going to be some action. Also, interesting to note how that's all setting up from a VSTOXX term structure perspective. Might be some interesting opportunities. Speaking of opportunities, outside of the ratio upside in VIX last year, I didn't see a ton that really caught my eye from a trade structure perspective. I also lamented the fact that we don't see that structure in reverse very often, if ever, in the vol landscape. I think a listener of this show heard that and said, I'm going to do that for size in VSTOXX instead, because that's exactly what we saw. We saw almost the polar opposite of the trade structure in VSTOXX this year, at least from an interesting trade perspective. The largest trade we profiled, certainly one of the more interesting trades we profiled throughout the year, started back on September 5th when paper came in, sold 12,000 of the D17 puts for $2.33, bought 2 of the D15 puts for 98 cents, obviously doing that for a 38-cent credit. I always like if you can do these to get them off for a credit, not the end of the world. Then, of course, nothing happens. You still get paid to put that trade on. That was the beginning of it. They kept adding more and more to it till it was pretty much short about 50 by 100,000 contracts, which for VSTOXX is a pretty sizable position at the end of the day. They ended up putting on some of the later ones. I think paper saw what he was doing, started to fade him a little bit, or the market makers saw what he was doing, started to fade him a little bit, because ended up getting the last chunk on for a 12-cent debit. So not quite as good, but he wanted to get it all done. And the trade, not just from a theoretical structure perspective, was interesting, but it also paid off. He made about a 50-cent profit on pretty much all of it out there as he unwound it. So not bad at the end of the day to put on an interesting structure, have it work out for a pretty sizable return here at the end of the day. Get paid to put something on, at least for most of it, get paid to take it off. Definitely not a bad do, as the kids say. And again, something that's intriguing. I've been doing this show, obviously, as I said, top of the show for well over a decade just on this show. I can probably count on one hand the number of size, funky ratio put trades I profiled in all of the vol products. So to see one go up for such size in VSTOXX and have it actually work out, kind of interesting. Again, we talked about it before, not exactly the sexiest structure to do all the time, but it's an interesting structure. And, if you think vol is going to crater, certainly intriguing. And also, unlike the call 1x2, doesn't have to be as wide. And obviously your downside is limited as opposed to the call 1x2, where things can go wild out there to the upside. And if you don't structure it right, it could be, as the Rock Lobster mentioned, could be difficult to manage, especially if you do these crazy wide ones like we saw this past year in VIX. I'm with the Rock Lobster on that. I'm not a huge fan of these super wide ones. I like to have them a little bit tighter, a little bit more manageable out there. And this certainly qualifies only 2 handles wide. So interesting stuff. Have you ever traded put ratios out here, listeners, in any of the vol products? I'm curious. Hit us up. Let us know. Certainly one of the more outstanding, at least to my mind, in terms of just differential type trades that we saw in the vol space for this year. But now let's keep rolling out here, listeners. We're already kind of coming up against it here. We're having a lot of fun talking about year in review. We'll just skip through the vol futures right now. Not a ton going on the term structure for this year. I will say the numbers are now in from our friends over there at OCC. So the VIX futures had a good year. They were up 7.7% in 2024, 60.1 million contracts out there total on the year. The month of December, they were up 11.3%. So a good month and indeed a good year for VIX futures. Getting out to VIX options. Is it a banger day in VIX options? The answer is not really. 403,000 contracts on the tape. That's respectable when you hear that the ADV is 692, but nothing to write home about out here. Our top 10, we're still 8-2 calls over puts out here, listeners. Our 2 puts to be found, 219,000 of the Jan 15 puts at number 5, 229,000 of the Jan 17 puts at number 4 out here, listeners. And it cost you 172,000 to break into the top 10. Today, that gets you to the Jan 40 calls. I'll really quickly run through the paper for the week here. Today, 403,000 contracts on the tape. The big dog today, 22,000 of the Jan 17 puts, followed by 21,000 of the Jan 16 puts. And for a little bit extra fun, March 50s, 18,000 of those going up today. Also 17,000 of the March 55, so maybe some vertical action out there. Then Thursday, 388,000, a pretty weak week. Easy for me to say. Say that 5 times fast. A pretty weak week, all things considered, listeners. 388,000 on the tape on Thursday. The big dog, 34,000 of the Jan 17 puts. So 17 puts, obviously attractive to a lot of folks, followed by 24,000 of the 15 puts. Wednesday, obviously, Happy New Year. No paper going up then. Tuesday, 473 on the tape. on New Year's Eve. 51,000 of the Jan 50s, 5-0s, was the big dog there, followed by 42,000 of the Jan 18. So some funky stuff. Looks like that might be our synthetic friend. We also saw the 18 puts going up for 35,000 as well. Monday, 314,000 contracts on the tape. The big dog, 30K of the Jan 15 puts. We already talked about what the Rock Lobster saw this week from a VIX options perspective. So let's keep rolling out here to the Rock Lobster's beloved product, that is SVIX. About 25 and 3/4 when we kicked off the show, down nearly half a point, about 0.45 on the week, listeners. In terms of action, it had obviously an action-packed year in SVIX, listeners. The high, 50.73. Can you guess when it was? Nope, not August 5th, obviously. This is an inverse product at the end of the day, so you got to go a little bit different, a little bit reverse in your methodology, listeners. But no, the low actually came midsummer, July 12th, 50.73. Interesting times out there in SVIX. The low, now you're talking August 5th, listeners. The low on August 5th, a 19 even in SVIX. So quite the range on the year for SVIX. Today, putting up about its ADV of 6,500 contracts. Actually, no, a little more now. It's ticked up to 7,500. So beating its ADV of 6,500, which is looking a little bit firmer, a couple hundred contracts more than it was a week ago. Mr. Rock Lobster, you've been struggling to manage a SVIX newsletter for the last couple of quarters of this past year. What caught your eye out here in the wild year that was SVIX, sir?
Yes, apparently the market did not tell SVIX what its job is supposed to be. You're just supposed to buy to make money. Somehow it missed the memo. So for the last 2 years, it's been pretty reliable as a short vol product. And for we launched our SVIX product, and guess what happened to SVIX? Take a wild guess. It spent a whole quarter not going down.
A whole lot of nothing.
So I actually have a loss on this one in it's our only, probably in our trading desk. Like, we had a good track record this year. We made decent money. This product, this one section of it though is down. However, I believe we will make our money back because volatility does decay, but you did see a pretty consistent, and again, the problem was lack of zone 1. So we basically missed an entire quartile for the low end of VIX for the last half of 2024. So since I, let's just say I have these positions and of course, that's why you allocate with vol products. So you could have what you think is the best idea ever in history for your vol product launch. And if you do some crazy allocation to it, you could be very grumpy. You could be rich, but you could also be grumpy. So I didn't over allocate to this strategy, thankfully. So it's not any more of a shock than any other trade would be, but it's still like I would like it to perform, and I think it will because that's how volatility works. So I would say though, for the second half of 2025, the performance out of VXX this literally, because inverse of SVIX, but it would be the poster child. The fact that if you would have asked me at the end of June that VXX would be unchanged for the year, and SVIX from the end of June would be down 20 points from the end of June, SVIX, for 6 months, I would have said, no way possible. Okay, there's a 1% chance or 2% chance, but to be down that much, I would be like, no way. It would, all those futures would just decay and rot away and everything would be hunky-dory. No, it didn't happen. Again, why? We started with that volatility picked up in mid-July, culminated with the vol explosion. So again, those inverse products have a hard time when you have like these explosive moves in volatility. SVIX got down right as low as 18. It made a comeback into the mid 30s, low 30s. We launched our product, I think, when it was around 27, 28. And basically, we had a very choppy vol scenario. Election came around. There was a bit of a relief right after the election. And then we got December, very volatile month. VX and SVIX ended the month of December down $4. So it's basically my last purchase on it was around $27. So I'm down a little bit, and I've descalped it a couple times according to the strategy. Now I just buy puts against it if once we get to a certain level, and I just don't sell it, I just roll the put. But at least from that point of view, where there's VIX futures, they decayed, but they did not decay. So the vol product, inverse vol product like SVIX, since the launch is basically in the same place. So it normally doesn't do that. And if we spend some time in zone 1 again, where the percentage of decay is very high relative to the cost, then the products would start printing money again. But as of right now, we're trading a 16.5 in VIX, and there's plenty of opportunity, I think, on the downside, because you do have that, first quartile to look at. We do have our new single-digit VIX president is coming back, even though he is not installed yet. But there is opportunity for that. We'll see. We'll see how the Doge, right? If there's any clarity on congressional spending, although I did see something today which just made me howl laughing, that some congressmen were complaining that why aren't they the ones to control the spending, when I'm pretty sure they're 99% of the problem in the first place. But it's kind of like the fox guarding the hen house. They're like, wait a minute, why can't we put more foxes at the door? So that was pretty hilarious to me. I think, who was that, like Lauren Boebert or something? That was an unbelievable statement. But anyway, as far as lows, so the second half of 2024 will be known as the half of the year that the vol products did not act like vol products. That's all I'm going to say. They did not act anything close to their historical norms. For SVIX should probably be up 50, 60% on the year. And, some a product like VXX or UVXY or something like that would be down, 85% on the year normally, but not this year.
Not this year, indeed. Listeners, let's run through a few others. We're already coming up against it, listeners. A lot to review. UVIX 3.25 when we kicked off the show, unched on the week. The low, a little bit shy of the 3 handle, 2.97 on December 26th. The high, 19.18. Guess when? August 5th. Putting up about 60,000 contracts today. So a decent day against the ADV of 40,000. UVXY 20.4 when we kicked off the show, up about 0.4. The high 61.77 on August 5th. The low 6.13 on March 27th. That put up about 73,000 contracts as of a little while ago. The ADV is 81,000, so getting some gusto back. And VXX 45.25 when we kicked off the show, up about 0.75 of a point. The low 10.16 on July 12th. The high 87.26. That's how high it got, listeners, on August 5th. So wild times and a wild year out there in VXX. About 20,000 contracts up today against an ADV of 31,000. All right, we're getting up to that time, listeners. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, Mr. Rocklaps, I have a question for you, because we're already kind of coming up against, I'm not sure if we have time to pay off all of the foul guesses we had from last year. I was going to leave our VIX poll for next week anyway. That'll be our end of year prediction game is going to kick off next week anyway. So I think we'll pay this off. All of you, all thousands of you who voted and hundreds of you who made predictions. Looks like we have a couple of winners. blame the rock lobster. But we might have to table. We have a lot of data to go through. So we will reveal the winners. Don't worry, there's some epic prizes coming your way in a little bit out here next week on the show when we also kick off. Watch for our 2024 poll. That's where you too can, if you didn't win this year, can win fabulous prizes at the end of the year. Speaking of winning, it was me and Steve Sosnick on the show last week. And Steve kicking off the year with a freaking bullseye. What's up with that guy? He's been eerily prescient out here so far. He was at about a 16.5, and VIX, as we're ending the show, 16.46 listeners. So a bullseye for him. He was also 16.5 on VSTOXX, not quite as close there, obviously 16.92. I was at 17.25, 17 double for VSTOXX, and no joy for me. So Mr. Rock Lobster, what is your pick for VIX for next week? And then B, where should folks go if they want more Rock Lobster goodness in their lives?
Next week, I think we see like 15.5 at this rate with the news cycle and everything. And optionpit.com. Go to optionpit.com. All my trading products there make money. So you earn while you learn. Learn while you earn. Give it a try. Actually, a mentor that trades all the stuff that he recommends. Oh my God. Who ever heard of such craziness?
Check him out, optionpit.com. Listeners, 15.5 is his vol prediction. I'm not hating close to that. I wouldn't mind a little less vol, actually, but that's not for next Friday. That'd be more midweek, giving away my position a little bit there. But I'm going to say less vol, but not quite as bad as the Rock Lobster. 15, let's go 15.76. I'll also do a VSTOXX. I will say 16.32 for VSTOXX. Unfortunately, that music means we've come to the end, man. Our year in review time flew. Listeners, like we said, we have thousands of people who played in our crystal ball game last year. We're still crunching all the data. I think we have a handle on who exactly won and how many of you there are. Surprising. Folks were pretty prescient last year. So we're going to reveal all that data. We will also unleash our game for next year, next week. So stay tuned for that. It's usually a fun one. A lot of VolTwit gets excited about it. They get in the game. And we'll also reveal what you guys said on our poll. Also on our poll, you folks, pretty prescient there as well. We'll get to all of that next week on the show. So stay tuned for that. Oh, by the way, in our chat, I see folks saying Queen was at a 16.5. Yeah, I do believe you were. I have it here for our producer's number. So Queen, a crystal ball winner for you. So you folks in the live get to play along as well. Our producers will reach out to you. Some fabulous prizes are in store for you, Miss Queen, as well. Man, Queen, you've been crushing it of late. Keep it up. Queen, you should run a vol book if you don't already. Unfortunately, that's going to do it for us on Vol Views for this week. Again, thanks to all of you who joined us throughout last year and who've joined us since the origins of this program well over a decade ago. Now, stay tuned for next week's episode where we reveal our winners of our VIX end of the year game. What a battle it was, and indeed still is. We're still sifting through all the mountains of data. I think we found all the nuggets there, but we're going to go through again just to make sure. Dot all the I's, cross all the T's over there. Listen, make sure also you stay tuned for our VIX poll that's coming out beginning of next week. That will be how you officially play in next year's vol prognostication game. We got a pretty good prize, I think, for the winners, so stay tuned for that. We're feeling generous over here in the land of Options Insider, so stay tuned for that. Thanks to all of you again who joined us throughout the year. Have a great weekend. See you back here on Monday for the option block all the way through to next Friday and another episode of Volatility Views. Stay safe out there, everybody.
The International Volatility segment is brought to you by Eurex, home of Euro stocks, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobabel, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European Volatility Benchmark, at www.eurex.com/VSTOXX. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.